Now I want you to imagine this. Buying a property in Singapore isn't just about finding a place to live. What if it could also protect you from rising costs? So here's the thing. The property market here stays strong even when the economy is tough. So when you own a property, you're not just getting a home, you're also making a smart investment that grows in value over time, and often faster than inflation. Inflation is the silent thief that erodes the value of your money. Prices are going up everywhere, groceries, gas, everything seems more expensive. Your money doesn't stretch as far as it used to, and you're probably wondering how to protect your wealth during those uncertain times. What if I told you that one of the best ways to protect your money from inflation could be through Singapore's property market? Yes, that's right. As prices rise, smart investors are looking to Singapore real estate as a safe way to secure their wealth. Now in this video, I'll show you why Singapore, despite being a small country, is one of the best places to protect and even grow your wealth in times of inflation. Let me ask you, what steps have you taken to protect your wealth so far? I love to hear your thoughts, so share your ideas in the comments below. To make things easier to understand, we're going to use my special method called the REI method to help you figure out how to evaluate property growth potential. So this video is divided into 3 main parts, so you can follow along easily and get the most important information. Number 1, why property prices in Singapore keep going up? And number 2, why Singapore is a safe place to invest? And number 3, why property is so valuable in Singapore. Hey, this is Coach Edmund, your Singapore Real Estate Insider.
If you have yet to subscribe to our channel, now's the best time to do so and follow us on our playlist where we cover a wide range of property knowledge to make 6-figure profits safely.
As inflation continues to affect economics everywhere, it's becoming very clear that it's not just a short-term issue. It could be a longer one, problem for years, and for investors, this brings up an important question. How do you protect your wealth when money seems to lose value every single day? Now, many people are looking for safe places to park their money, such as gold, commodities, or even cryptocurrencies. But in all this uncertainty, one asset has quietly stood out: Singapore's property market. Singapore's property market is known for being stable and reliable, especially in tough economic times. While markets around the world may go up and down, Singapore's property sector has a strong track record of staying resilient and bouncing back even stronger. So let's take a look why Singapore stands out. First, let's talk about rental income and why it's important in Singapore property market. Rental income is one of the reasons why property in Singapore stays strong even when prices goes up. So unlike other types of investments that can go up and down a lot, rental income tends to rise with inflation, making it a stable and reliable source of income for property owners. So why does this happen? When inflation happens, the price of everything goes up, like groceries, utilities. This means tenants usually expect their rent to go up as well. Because the cost of living has increased, so landlord can increase rent to match these rising costs. But there's more to it. Singapore has a lot of expatriates who come here to work for big companies, especially in areas like finance, tech, and healthcare. Because many expats prefer renting, especially in good locations near the city, the demand for rental homes stays strong. This allows property owners to charge higher rent, especially when the economy is doing well or inflation is high. Also, many younger Singaporeans choose to rent instead of buying a home, especially while waiting for their government flats to be ready. This adds even more demand to the rental market, making it easier for property owners to find tenants. Next, Singapore is a small island with limited land, only about 700 square kilometers in size. Now, because of this, there's also so much land available to build on. Every piece of land is important, so the government has to plan carefully about what gets built and where. So this includes balancing areas for homes, businesses, and nature. For property homeowners and investors, this means that land is valuable and the supply is limited. With less land available, demand for property tends to be high, which can drive up property prices. So if you own property or are thinking of investing, the limited supply of land in Singapore can make it a good opportunity. But it also means competition for available space is strong. Number 1, high demand, low supply. Singapore has very little land available to build new properties, which limits the number of homes that can be developed. Because of this, there's always a high demand for housing, both from locals and people moving from other countries. This constant demand pushes property prices up. especially in areas that are already popular like near MRT stations, schools, business centers, and commercial effects. For homeowners, this situation is good because their property's value is likely to increase over time, particularly if their home is in a sought-after area. Investors also like this because with so little land available, there's less chance of property prices crashing because of too many homes being built. 2. Protection against inflation and speculative bubbles. Singapore property market stays steady because the government controls the amount of land available. So in other countries, property prices can swing widely like a yo-yo because of speculation or inflation. But in Singapore, the government has rules to prevent this, keeping the market very stable. For example, there are extra tax for people buying more than one property, ABSD, and limits on how much money we can borrow for a property or LTV. So these rules stop people from buying properties, and it's only getting harder and harder just to make a quick profit and help avoid big price hikes. This means the property market in Singapore is safer and more reliable for long-term investors. Number 3. Strong investor confidence. Singapore's property market is seen as a safe place to invest, both for locals and foreigners. When the global economy is uncertain, investors prefer markets that offer steady returns with less risk. It is attractive because there isn't much land available and the country is well managed and transparent. Now, this makes it a very reliable place for investment. Foreign investors in particular are interested in high-end properties and commercial space because they know that the limited supply of prime land will keep prices rising over time, making it a good long-term investment. Number 4. Strategic developments to maximize space. Even though Singapore has limited land, the government makes sure every bit of space is being used wisely. They keep coming up with new ways to create housing and business areas. So for example, projects like the Greater Southern Waterfront, as well as the Paya Lebar Airbase redevelopment, shows how older areas are being transformed into new space.
I'd love for you to share this video if it has been helpful. Don't forget to like and subscribe to the channel to learn more about property investments. And yes, the notification bell is just right there. I'll see you real soon.
Another way Singapore handles its space issue is by building upwards instead of outwards. Tall condos and office towers fill the skyline, which helps the country fit more people and the businesses while still protecting the land. Now, one important thing to keep in mind is that Singapore's economy is really strong, which helps keep its property market healthy. Singapore constantly has one of the highest income levels per person in the world, and this is because the country has a wide variety of successful industries like finance, tech, medicine, and trade, which makes it an attractive place for businesses all over the world. Also, Singapore has a very low unemployment rate, around 2%. This means most people in Singapore have jobs and stable incomes, which leads to more people wanting to buy or rent houses. Both investors and homeowners believe that as long as the economy keeps growing, property prices will keep going up in the long run, helping them make a profit. The government also plays a smart role in keeping things stable. Even when the economy faces challenges, MAS uses tools like changing interest rates to control inflation and keep the economy stable. Now, this careful management makes people feel more confident that Singapore's economy will stay strong in the future. Inflation in Singapore is usually low, which is good because it helps people keep their money's value. And this makes it easier for investors and homeowners to pay off their loans without worrying about rising costs. Low inflation, along with steady wage growth, helps people feel confident about spending, which keeps the demand for property high. So in short, the strong economy, low inflation, and steady demand for property are all the key reasons why Singapore's real estate market remains strong. Given its limited land supply and high population density, the demand for housing remains robust, even during challenging economic conditions, such as inflation periods. The steady demand for property in Singapore helps keep property values stable, which is good for investors looking to make money over time. The Singapore government also plays an important role in keeping the property market stable. They use rules like property taxes, limits on loans, and cooling measures to stop people from over-investing and causing property prices to skyrocket, which could hurt the market. These rules help protect property values and create a safer environment for people who want to buy or invest in property. Now, this balance of market controls ensures that property in Singapore remains a smart investment in a long run. So want to join our in-depth session? I want you all to comment Masterclass and I'll make sure you get an invite for our upcoming online event. Lastly, the government plays a big role in making sure the property market doesn't go out of control, especially when inflation or economic problems happen. In times of rising prices, things like property can become expensive fast. To stop this from happening, the government has set up rules to keep the market steady. One of the main rules is ABSD. This tax was introduced in 2011 to slow down buying from foreign investors and people who own multiple properties. Now, these buyers were pushing up property prices too much. So for example, a foreign buyer now has to pay 60% tax on property purchases, which discourages them from buying just to make a quick profit. So this helps keep property prices more affordable for Singaporeans. When inflation happens, people might look to buy property because it's a safer investment compared to cash, which loses value. And without rules like ABSD, foreigners could buy and flood the market, driving up prices and making it hard for locals to buy homes. So the government's goal is really to keep things balanced and make sure prices don't get out of hand. Another rule the government uses is the TDSR. So this rule limits how much one can borrow based on their income. It helps make sure people don't borrow too much and get stuck in debt, keeping the market safe for everyone. So these rules together help create a more stable property market, protecting both local buyers and long-term investors. And now to add on, the government also keeps a very close eye on the supply of housing to make sure there are enough homes without flooding the market. Through its land sales program, the government releases just the right amount of land for new developments based on how many homes are needed. This actually prevents two things. One, too many homes are being built, which could cause property prices to drop suddenly. And two, too few homes are being built, which would push prices up too much in a competitive market. So by balancing this supply and demand, the government helps keep the property market stable and growing at a healthy pace, even during times of inflation. So for property investors, this means you can invest with more confidence, knowing that the government is working to keep prices steady and protect the market. Now, as a result, Singapore's property market remains a very safe and reliable option both for locals and international investors looking for stability in a sometimes unpredictable global economy. Singapore's property market is a very safe bet during times of inflation for a few key reasons. First, the country has a strong economy and good government rules and a constant need for housing, which helps keep the property market stable. And over time, property values usually goes up, often faster than inflation, helping to protect and grow wealth. Plus, because land in Singapore is limited and carefully planned, property values stay strong. So anyone looking to secure their money during inflation, investing in Singapore property market is a reliable long-term option. For advice that suits your personal situation, just pause the video and scan the QR code on the screen. And by reaching out, you'll get our advice to help you make confident property decisions. So if you found today's tips useful, please like the video, subscribe to the channel and click the bell icon so you won't miss any updates. So we are constantly pushing out new contents every single week and we want you to stay informed so that you can make better decisions for your own family and your property needs. So thanks for watching and I'll see you next time.